Welcome back everyone to this video on currency pairs. Now I know we spoke about currency pairs before and I'm not going to go in depth with currency pairs because we did it in the previous video. What I'm going to do in this lecture is talk about base and quote currencies, then bullish and bearish trends, and then I'll be talking in detail about buying and selling and what actually happens in these transactions. So yeah, let's get started. So when we were talking about currency pairs in the previous video, I just thought this pie chart on the right is quite interesting. It shows the major pairs, and 29% of the major pairs comes from the Euro USD. And if we just bring this Euro USD here and just have a look at it, is the Euro and the USD are separated by a forward slash, and if we just remove this, we will just get Euro USD without the forward slash, and this is the representation in on Forex charts. Sometimes you might see it displayed this way, so it's good to see it displayed in this way, so when you see it, you don't freak out. So the currency on the left, the euro, is known as the base currency, and the currency on the right is known as the quote currency. So, and you're probably thinking, how is this applicable? Well, when we talk about buying and selling, I will talk about the base and quote currencies and what it means. So, but for now, just know that the left is the base and the right is the quote currency. And let's say the Euro USD is 1.1461. Now, what does this mean? Well, what it means is that 1 euro would equal to $1.1461. So if I had a euro and I exchanged it, I could get $1.15. So that's all for base and quote currencies until I explain it in later on. So let's move on to bullish and bearish trends, so bulls and bears. And a bull is what is known as an upward trend or an increase, and a bear is known as a downwards trend or a decrease. So let's have a look at what a bull is. So when we say the word bull, what does it remind us of? Well, it reminds us of a picture of a bull fighting. And how does it fight? Well, it brings its horn down and then it lifts it up. So it's starting down and then it's going up. So when something starts down and goes up, that's an upward trend, or it's an increasing trend. So when we look on if we look on this this forex chart on the US dollar and Australian dollar, we will see I've highlighted an increase in the in the in the currency rate, and this is known as a bullish trend. It's an increase. So that's really all you need to know, and it's really important when people are explaining their strategies. They will also include these jargons, and it's good to get familiar with these words. So let's move on to a bear. So bearish trends. So if you think of a bear having a fight with another bear, it attempts to bring the bear down. So it starts high and it goes down. It brings the bear down. So if you start up high and you go down, that's a downward trend. And if you look on the forex chart on the right, you will see same graph but a different time. There is a bearish trend, there's a downward trend, and yeah, that's as easy as it gets. It's just getting familiar with these jargons, and that's it. And now we're going to move on to buying and selling. So moving on to buying or longing or going long, I will illustrate this concept by an example of something that's tangible. So it is easier to understand when you're explaining something that's tangible first, before moving on to exactly what happens. So let's start off with this example here. So let's say we have gold. So let me draw the graph for gold. The price to gold, and here's the graph. And let's say that I predict that in a certain amount of time, the gold will rise from £20,000 per kg to £30,000 per kg. And but I have no money to buy it. I have no money to invest in it. But that's no problem because I have a friend, and what I'll do is I'll borrow £20,000 from my friend. Then I'll buy the gold. I'll buy 1 kg of gold for £20,000, and here I am, happy with my gold. Then I'll wait some time, maybe a couple of months, a couple of years even, and so I have this 1 kg of gold, and now the value of gold is not £20,000 anymore per kg, it's £30,000 per kg. And I have 1 kg of gold. So now I sell that 1 kg and I get £30,000. Then I return £20,000 back to my friend who lent me it, and I keep £20,000 profit. So that's really what buying is. So you're borrowing from your broker, and then you're investing in it. And I'll give a very good example underneath. So in the Forex market, let's say the Euro USD, and here is the chart for it. And you're predicting that the current rate is at 1.1461, and you're predicting that the rate will rise to 1.1561. So you're expecting like a bullish trend. So in other words, you're expecting the strength of the euro to increase in respect to the USD. So the graph will increase, the rate will increase, the currency exchange rate will increase. So you're planning on buying it when it's low and then selling it when it's high, and then making a profit like that. That's great, but how does it work? Well, let's use a, a very similar example to the example I gave above. So here is me, and I need to invest in this, but I have no money. So here's a broker, and I borrow. Let's say I borrow $11,461 from him. Okay, so he lends me that, and so with that I can buy 10,000 euros. Okay, so I buy 10,000 euros, or if it helps you to understand, think of a box that is worth 10,000 euros. Okay, it's fixed in value. Now, over time, this I still have this box which is worth 10,000 euros, but now the exchange rate has increased. So for every euro now, it's $1.1561. So now what I do, so now this 10,000 euros, this box that I bought for 10,000 euros is now worth $11,561. So now this is great. So I sell this box and I get $11,561. So now I have this money, I return $11,461, which the broker gave me initially, and I keep the profit, which is $100 in profit. Now that's how a buying transaction occurs on the Forex market. So essentially you're buying at a lower rate and you're selling at a higher rate. And this concept is called going long, or yeah, you'd hear someone say buying or going long in a Forex market. It's just another jargon. So yeah, so let's move on to selling. So the concept of selling, or short sell, or shorting, or going short is quite similar to the buying one. Yeah, let me show you. So I'm going to start with the similar example as I showed before with buying, and let's say this is gold. Gold price time, and you're expecting, so the price initially of gold is £30,000, and you're expecting the price to drop to £10,000, and you have you have no money, you have no gold, but you have a friend, and that friend lends you 1 kg of gold. Yeah, so this it's £30,000 for a kg. So your friend lends you 1 kg of gold. Now with that 1 kg, you 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 get rid of that gold and you have £30,000. So you sell that gold and you keep the £30,000, and you wait for a bit, for a while, and when you wait for a while, the price of gold is not £30,000 per kg, it's £10,000 per kg. So if you've saved that £30,000, how many kg of gold can you buy? Well, you do £30,000 divided by £10,000, which is 3 kgs. You can buy 3 kg of gold. So that's what you do. You buy 3 kg of gold and you give back your friend 1 kg. Okay, you don't give them interest. I mean, they might be a good friend, but they might just owe you that favor. So, and you keep 2 kg of gold as profit for yourself. Now that's how this selling thing. In this way, you can make profit. So let's move on to the Forex concept now. So you have Euro USD, and another thing I wanted to say is, with the Euro USD, the base and quote currency. So when you're buying, you're buying the euro and you're borrowing the USD when you're buying. When you're selling, in this example that I'm going to show, it's the opposite. So you're borrowing euros and you're buying USD. So let me explain. Let me say that again. So when you're buying euros and you're borrowing USD. So you're buying the base and borrowing the quote. When you're selling, you're borrowing the euro and you're buying the USD. So you're borrowing the base and you're buying the quote. So in this example, you're selling. So you're going to borrow the euro and you're going to buy the USD. So this is the graph for Euro USD, and you're predicting that the graph is going to go down, so the euro is going to weaken. So you're expecting a bearish trend. So the initial value is 1.1661, and you're expecting the Euro USD value to go down to 1.1361. So you're expecting the euro to weaken against the USD. So what do you do then? Well, you conduct a similar approach to the one that we explained. So here you are, and you have no money to invest, but you have a broker. So the broker would lend you 10,000 euros, and with that 10,000 euros, you sell that 10,000 euros, you get rid of it, and instead you buy $11,661. And you can buy this because of the exchange rate above, which is 1.1661. So now you've bought $11,661. So you've only got dollars now. You wait a while, a bit of time passes by, and you have $11,661, and you want euros now. You don't want dollars because you need to pay your broker back in euros. So you have to convert this dollar that you have into euros, and the new exchange rate is 1.1361. So the way you work out how many euros you're going to get for that is by getting the value in dollars that you have, so $11,661, and divide it by the new exchange rate, which is 1.1361, and that gives you 10,264 euros. So now you can give back the broker his 10,000 euros, and you can keep 264 euros in profit. And One person might be thinking, but you know what? My account is going to be in pounds. I mean, I don't work with euros or dollars. Well, it's converted into its relevant currency pair that you're investing in. And just to summarize this selling procedure or going short, what you're doing is that you're selling a currency at a higher rate and you're buying it at the lower rate. So in that way, you're making profit, and this is called short selling. And I hope you understood that example. Just go over that example. I'm gonna leave these notes as well for you to have a look at it and understand it for yourself. And yeah. So I hope to see you in the next video. In the next video, I'll be talking about ask and bid prices and spread, etc. So yeah, thank you for watching.